Morning, everyone.
Good morning.
How we doing?
We are doing.
I like the new setup, Carson. Looks good.
It's coming along. Slowly but surely.
All right, who we got in here?
I always think about as I continue to get my setups better and better and better. I always think about my first setup, and I actually have a picture. I have pictures of all my setups. That's something I might post in coming weeks or months. Just like the levels of setups,
It grows
the
over
growth.
time. Yeah. All right, cool. Let's see. I think that's eyes in the mirror. Let me know. Emmy, good
Good
morning.
morning, everyone.
He, Patrick, good morning. Florine, good morning. Ranjan, good morning. Terry, good morning. Abdul, good morning. Let's see. Mauricio, good morning. There you go. All right. We'll give a couple more minutes for people to come in, and then we'll go ahead and get started. Pretty exciting end of the week last week, huh?
Won't be as exciting as the end of this upcoming week for me.
Oh yeah, finishing out that 75 hard. This is our
Yep.
last week of it.
Yep. Friday's my last day.
All right. Parker, good morning.
So weird having my camera right here. Gotta get used to that. It's like my dominant screen's right here. I'm constantly looking right here, but I gotta remember the camera's right there.
It's a change up.
Change the scenery.
All right. Kate, good morning. All right. Should we get started?
Yeah, why not? Go ahead and do it. Alrighty. So, news for this week. Can you see my screen?
Yes.
Alrighty. So we have no news on Monday. You'll notice that not a lot of times we have really high impact news on Mondays. That's one reason why. There's many reasons why I stay away from Mondays, but a lot of the reason as to why I don't is just because there's simply usually not really any news. Tuesday at 8:30 a.m. you've got building permits. Not a whole lot going there on Tuesday. Wednesday, nothing going on in the AM session. On the PM session side of things, though, you do have the Fed funds rate, FOMC projections, FOMC statement, and then the press conference at 2:30. So you've got FOMC release there on Wednesday during the PM session at 2 and 2:30. And then Thursday, you have at 8:30 you have unemployment claims. At You also have a Philly Fed index as well at 8:30, and then at 9:45 on Thursday you have flash manufacturing and services PMI, both being released right after that equities open at 9:45. 10 a.m. you have home sales, and then Friday you have Powell speaking at 9 a.m. So obviously FOMC on Wednesday and Powell speaking are the two main things. Powell speaking on Friday are the two main things I would look in and around this week with understanding what might potentially happen. So keep that in the back of your mind. Any questions on news? All good there? Alrighty, well, I guess we don't waste any time, but we'll go ahead and get into it.
Got a comment. Eyes in the mirror. Can we trade AM session on Wednesday?
It's not ideal. It's not ideal. You would prefer to not necessarily trade the AM session on Wednesday, because usually what that AM session is doing is it's just accumulating orders on both sides of the market, and usually it then uses FOMC as a catalyst to seek and destroy those orders. So you tend to see more of a consolidative range on that AM session on Wednesday leading up to FOMC. Think about it this way. The move 9 out of 10 times will happen on that specific day. The move for that day will happen in the later session, so it's not going to really go anywhere or do anything too crazy in the AM session. So just keep that in the back of your mind. Okay, so dollar here. Let me do something really quick. Okay, so on dollar. So we're talking about how we pulled up into this weekly and monthly SIBI and displaced away from it, right? The main thing is when we trade into these SIBIs, what do we do following? Do we create new SIBIs and or do we create new BISIs, or do we just consolidate and not create any displacement? Well, you can see after the closing of this week, we did create a new SIBI, right? So price is trading into premium arrays and displacing off of it, creating new premium arrays. So that's something to note with regards to order flow. You want to keep that in mind. With that being said, where do I think price could potentially draw? Well, until I see closure back above this SIBI, the idea would be price would continue going lower into the sell side, which would be the previous week's low, and then into this buy side imbalance, sell side inefficiency on the weekly. So that's where my head is at on the weekly here. And really when you go on the daily, you can see basically we were talking about how there's two SIBIs here, right? So I'll even draw this one out also. There was two SIBIs here, and although we weren't necessarily expecting the first one to trade, or the second one to trade, it was permissible that it could, right? So you can see here we have visited the second one. That's why you give price the reason, or not reason, but the ability to trade back up into this SIBI, because although there's this one down here, there's one above it, and there's a volume imbalance. So you can see price is balancing in the range, pulling up to the second volume imbalance, and it's also visiting prior week's lows, right? You can see there's a prior week low here and a prior week low here, and you can see we revisited this one on, I believe it was Friday. Friday we revisited it. So my expectation now is to see if we do respect this SIBI. When we come back down here, you can see we also created a BISI right in here. So I would be curious to see if we can invalidate that, close back below it, and then use that as resistance and go lower, right? That's my main idea for going into this week. Now, if we do use this BISI as support and we start to use this SIBI as inversion, right, the idea would be we could potentially come back up higher. And if we do get daily closure back above this SIBI, I would expect price to actually then start carrying higher, right, into this high and then into potentially this high, and there's a volume imbalance right here, and revisit the SIBI on the weekly. But why am I bearish? Because of the fact of, on the weekly, using my higher time frames, on the weekly, just because we created displacement right here, I'm not necessarily tilting my head bullish because we still have displacement on the weekly, right? We pushed up into a weekly array, premium array, and with that created displacement away from that. So I have to trust that that higher time frame order flow is still in place. Now, what would cause price to potentially go higher? Well, if you go from low to high of this parent price swing, and you look at the equilibrium of it, you can see that we pushed back into a discount, right? There is a liquidity void in here, but notice how there is no candle closures, right? We'd like to see candle closure through that area. We just left this wick, but we did press into a discount and are delivering from that discount higher. So that would be a reason as to why price went higher towards the tail end of last week. But I'm still expecting price to go lower. Until I can see price respect this BISI and respect this SIBI with regards to inversion, I'd like to see price turn back lower and use this as resistance, right? That's the main idea that I'm looking for this week. And if it shows me something otherwise, that's totally fine, and I can react to that. But other than that, that's really all I'm looking for this week. The idea is, I don't suspect the dollar gaining any value. I think that the dollar is going to go lower, but I could be completely wrong. I don't necessarily have to be right in this stance to make money and be profitable. I just need to wait and watch and see what it's doing. So I would like to see if during, Monday, Tuesday, Wednesday, we form some sort of high in here, right? Watch for candle closure. It can go a little bit higher than this, but I'd like to see where the bodies are closing with regards to the daily, and in and around this daily and weekly SIBI, right? We've got a daily SIBI and a weekly SIBI nested together alongside previous week's lows. And so from that point on, I would be looking to see also, right? If you look from here to here, we might come up and stretch and wick at this equilibrium, but then also if you use this right here, right? The most recent energetic price swing in here, you can see we've now delivered into a premium with regards to this range in here, right? I'm looking at my standard projections as well. Right, you can see that we cleared the -1, and I'd be curious to see if we could start to reach for this -2 and potentially 2.5, and that would fill this entire inefficiency down in here. Right, you can see we have a larger daily BISI as well. Any questions, comments, or concerns on dollar? Right, this last move higher on Thursday and Friday isn't necessarily showing me anything yet with regards to potentially being bullish. Until we can close above these areas, then I can start to consider it. But until then, I'm just viewing this as a retracement higher to then continue order flow going lower. Bearish dollar, then indices bullish. Yes. And that's why Henry will get into it. But although we did see a sell-off on Friday, we're not automatically shifting to a bearish stance on indices yet. There's still, just because we had a sell-off on Friday, that doesn't necessarily automatically that we're shifting. Could it potentially lean to an idea? Yes, but really I think that this week should be the telltale sign of what we want to do. Because if for whatever reason indices do pop right back up, right, and we are seeing, this could be a week where we start to clearly see a trending market. Because if indices pop right back up and we see dollar respect these areas and go lower, that's a very telltale sign that we're back in a trending market. Indices can continue higher, dollar can continue lower. Now, if we do see the dollar close back above these levels, right, and if we do see the dollar close back above these levels and start to use them as support, right, in that stance, then we could start to see dollar go lower, or indices go lower. So I think after this week, we should probably get a good idea of what price wants to do going into the next potential month to couple months. Dollar's starting to get a lot more volatility in it. It's starting to trade a lot more clean, right? We did not have a whole lot of area to work with in here with regards to what the dollar was doing. Now we're starting to get displacement, and we can read the narrative behind the displacement based on the daily closure, and with that, take that to the indices and see. So, going into this week, not necessarily relatively all-out bearish on indices, but at the end of the day, we want to see where this week closes, because if we are turning the tides, which we're kind of coming into that next quarter. If we are turning the tides and we are getting a quarterly shift, you'd want to see dollar disrespect these premium arrays and start to move higher. If that does not happen, then you can continue to see indices move higher. Any other questions, comments, or concerns there? All right. All you, Henry.
All right. All right, here we go on indices. So like Carson said, we're still looking for order flow lower on the dollar as long as we've had continue to respect that higher time frame. PDRA being the weekly SIBI above. With that, we would expect indices to go higher. We have been talking about over the past couple of weeks the discount arrays below, which you'll see as we get into the weekly and daily PD arrays, and how we would want to see those respected if price was going to continue trading higher. On NASDAQ, we did see very slight, on NASDAQ, we did see very slight closure below the mean threshold of that down close candle, which we're looking to continue supporting price as a discount array. Closing just below it right there. But this move lower also brings us back into a discount of this larger dealing range right here. And so we want to switch to temporarily a point of a neutral bias until we get some more information on, is the dollar going to respect that SIBI above and continue moving lower? And then we could see indices continue to rally after reaching back down into discount arrays. Okay, and if dollar is going to go and cut through that SIBI above, then yes, we could be seeing at least a short-term turn in the market to start seeking a deeper discount. Okay, so we want to utilize the week ahead to start framing what could occur going into the end of March and into April as well. Okay, so let's start over here on ES, which we've still seen show a greater bullishness than NASDAQ has. A couple things I'm just noting here on the monthly chart. Still seeing bullish order flow on the monthly, but you can see so far that we're not at the close of the month yet. There's still 11 days and 7 hours, but we are back at that prior month's high. And if we do end up finding closure below the prior month's high, the likelihood that we gravitate back down into this area after the monthly closure is significantly higher. Okay, so I'm just noting the sell side below the current month's low right here, and then you want to be aware of the fact that we do have inefficiency here on the monthly chart, given that we've only had buy side delivery here and not yet sell side delivery into that area. Okay, we'll drop down into a weekly here, and you can see that this past week we made the low of week right here inside the volume imbalance, which was created here after price reached back down into the bullish order block, respected it there, and again here, nicely respecting the volume imbalance as well, and then this week tapping into it one more time on that Monday, running up toward the high but not purging the high. So we still are in consolidative conditions here on a weekly perspective. You can see ES had an inside week, not purging the prior week's high or low, and so usually when I see an inside week like this, I need to switch to somewhat of a neutral perspective. And if you are looking to trade intraday, until you get some sort of move outside of this prior weekly range, so either outside the high or the low end of it, then you need to be operating from the lower time frames. So you kind of can start to use your 4-hour and 1-hour charts to shape what your draw on liquidity may be. But you're not going to have a further draw on liquidity that's super clear until you break outside of one end of that range. Okay, so just noting that we're in consolidation, you want to be aware of that and operate with those conditions in mind. On the daily, ES did not go down and purge Monday's low, which NASDAQ did on Friday. So just noting, if we are going to continue following down through the downside, you have Monday's low being sell side liquidity down here, and we can reach back into that volume imbalance as well. And we're just noting here that we have gone and closed on Friday back through the BISI that was created here, right? And also in the lower portion of this reclaimed BISI, which was utilized right here. Okay, so we're starting to trade back through discount arrays. We are back into a discount of the range, which means we could continue work higher from here if dollar is going to draw lower. Okay, so we're at a discount, but we're also trading through discount arrays that were up in a premium. So we're not showing the same bullish sentiment that we were as price was rallying higher, higher, higher. So we need to switch to a bit of that neutral bias. Just as we get into the next week, I think it's likely that we could draw a little bit lower on indices, potentially draw back into Monday's low right here. But I want to allow the first few days of the week to play out and start framing what could develop into the week. So I really don't have a strong draw on liquidity to share on this Sunday one way or another. We want to let the first couple of days play out. If we're utilizing discount arrays and starting to displace lower on the 4-hour and 1-hour time frames, we can gravitate back up into a premium and continue working toward the buy side. Okay, you'd want to align that with dollar as well. So if you see dollar reach up into the weekly CIBI and then start to displace lower, that would be good to frame that idea. If you do just continue to see price draw through the sell side and continue displacing lower on your 4-hour and 1-hour charts, then we can continue drawing back down into the current monthly low down here. Okay, so really operating at a neutral perspective as we head into the week, and you want to let that displacement start telling you the story. All right. You want to watch what are now premium arrays above as well. Okay, so now that we traded through this BISI here, you can keep that marked on your chart and see if price is to reach back up into there on Monday or Tuesday. Do you start seeing this utilized as inversion to trade lower, or do you see closure back above the consequent encroachment of it and continue to draw higher? Okay, so we really need to wait and follow the displacement this week and start the week initially at a neutral perspective. Does that make sense to everybody here? Let me know in the chat if you're all good here on ES. Clear, eyes in the mirror. Chlorine, 100, awesome. Kate, good. Parker, good, okay. Very good. All right, so we'll move over to NASDAQ. Oops. NASDAQ has dropped off a bit more than ES has already. And we can see that, remember on Friday we were talking about how if price could draw lower, we could seek January's high to do an immediate rebalance, which we've done right there. So there's no remaining inefficiency here on the monthly perspective like you still see on ES. Okay, between the current monthly low and January's high, that area of inefficiency. Here on NASDAQ, it has already been closed in. All right. So now in terms of discount arrays on a monthly perspective, if NASDAQ is going to continue working higher and not have a deep retracement, it'd be preferable to not see it trade into this inefficiency and just work inside this candle's wick. So you can look at the consequent encroachment here of the wick, and you really wouldn't want to see it trade much deeper than that if we are going to continue working higher in the near term. If we're trading beyond that consequent encroachment, the likelihood is that we're going to gravitate down into this inefficiency here. Okay. We'll move to a weekly here. You can see that this volume imbalance still has not had any candle bodies through it, so it can continue acting as a magnet on price. So if we are going to draw a bit deeper down into that monthly wick, you can draw back into the volume imbalance here on NASDAQ. And then the last thing to note really here on a weekly chart is just that we did find closures slightly through the mean threshold right here. But normally what I'd like to see is if we're going to continue respecting this as a bullish order block, I'd want to see on that very next candle for price to go and close back above the mean threshold. Okay, so even if it initially drops lower in the week, if it does see closure back above the mean threshold, that would be a good signature that we could reach back into premium arrays. Okay, you do have a really small volume imbalance right here that can be reached for. And then, of course, you can reach back up into the prior candle's premium wick. All right. On a daily time frame, you can see that we have gone and run out those relative equal lows like we talked about on Friday. Dropping through there, there is still a small portion of the inefficiency which has yet to trade. So if you look at that, that is the remaining portion of the inefficiency. You can see how we traded right down to just about the midpoint of that area and in line with the monthly immediate rebalance. And so we could allow price to work inside this area of inefficiency and at a discount of this parent price swing right here and still continue higher back up into premium arrays. You see you have these volume imbalances above that we can draw back into. Okay, so just like ES, we need to start from a neutral perspective. And we need to see how the beginning of the week shapes up and how that may influence the remainder of the week and then as we go into the end of March. Okay, so if we initially draw lower in the week and then you start seeing displacement back to the upside on your 4-hour and 1-hour charts, we can draw back up into these volume imbalances here. And if you initially see a short-term move higher and then continued displacement to the downside, we have this volume imbalance to draw into from the weekly, and of course sell side below if we are going to have another large expansion week to the downside. Okay, so starting the week from a neutral perspective, and you want to start following that displacement from your daily time frame, your 4-hour, your 1-hour time frame. Until we start seeing new displacement one direction or the other, all we can really say for price is that we're trading at a discount and we've traded back through sell side liquidity. So we can either continue drawing lower or utilize this as a stop run and push back into the upside. Okay, so that's why we're watching for that displacement on that daily 4-hour, 1-hour time frames. And until we see that, there's not really a whole lot of clarity on indices as far as we are likely to go to the downside or likely to go back to the upside. Right? That pretty much covers it for me here. Do we have any questions on NASDAQ? Alan, you want to see NASDAQ weekly close above the order block mean threshold to remain bullish, or is a daily close okay? I would prefer to see a weekly closure back above, because the daily could initially draw back just up into premium raise like Thursday's low, or even create a new SIBI and then draw up into a SIBI right here and then continue drawing lower if we are going to go that way. A weekly closure would be better. Any other questions here on NASDAQ? Let me know with the thumbs up if you're all good. Eyes in the mirror, I see you typing. Alan, I see you typing. Okay, all good. Clear as always, eyes in the mirror, awesome. Luis, thank you for the thumbs up. Florine, all good. Good. All right. So Alan, I still see you typing. I'll wait if you do have a question. But yeah, again, so just looking at this from a fairly neutral perspective, noting the discount arrays below that we could trade into, so you have the remainder of the inefficiency and you have the volume imbalance below, and then noting the premium arrays that exist above. So we're now trading at a discount. We can see price draw back up into a premium or continue working deeper into a discount. It's still too soon, as far as I see it, to start calling this a top at the moment, okay? Because we need a little bit more development as we head into the end of March. Yeah, Alan, this week could be a test of your patience, certainly. So you need to let those couple first days of the week play out, even let it go into FOMC and see where FOMC ends up taking things, and that should give a better framework as we head into the end of March and into April. Should give a lot more clarity for where we could start moving toward. Carson, any last thoughts here on the indices?
Nope, I'm good.
Okay. All right, then I guess we'll go into training exercises.
Yep. Let me pull it up really quick. Hold on, give me just a second. Alrighty, I will share my screen. Can you see my screen? Alright?
Yes, all good. Yes, all good.
Okay. Alright, so with regards to last week's exercise, we wanted to basically just see how you guys stood with regards to the 2022 ICT mentorship model. As this next week, starting on Monday, we will start our study. So curious just to see how you guys performed with regards to trying to identify and execute the 2022 mentorship model. The only time throughout the week that was not allowed for trading was 15 minutes before or after the CPI release. Everything's fine here with regards to the amount of trades and what you risk. Axel, First one, blue dot was the long-term low, orange dot was the immediate term low, and pink dot was the short-term low. Took two partials and then got stopped out. Wouldn't change anything about it. Advanced market structure let me know everything I needed to know before getting stopped out. Just another day of price taking the stairs up and the elevator down. Bearish breaker forming, fair value gap plus intermediate term low getting violated. We know what comes next. The only thing I would say is what I'm not happy about is when I risk 0.5% or 1% to make 0.3% like I did on this trade. Entry management was solid enough to capital preservation was prioritized, so I should be content with enough. So you can see through here, he's utilizing this blue dot as a long-term low, these orange dots as medium-term lows, and then he's utilizing the pink dots as short-term lows. So you can see he's getting in as price trades into this fair value gap right here, utilizing this as the market structure shift, and then from there, utilizing this last down close candle prior to the market structure shift as a order block, getting in once price fills in this area. Stop loss is below the short-term low, or I guess it's at the intermediate term low, and then kind of just giving a little bit of high resistance liquidity running here. Takes his first partial in here, takes his second partial in here, and then getting stopped out once he moves his trade to break even. All good there for the most part. I don't see anything wrong with the trade, right? I mean, you did what you were supposed to do. That's why you take partials. It looks like you can tell too you were utilizing dollar pushing into this area to see it go lower. I don't really see anything. The only thing that I would maybe change or alter a little bit is you could have moved your stop maybe a little bit higher into the short-term low in here once you see price respect the low end of this breaker. But I don't see anything wrong with it. Henry, what about you?
No, I think this is a great trade. You did really well. Partials up there. Just like we talked about on Friday. Like Wednesday's actually really similar this week. When we're returning up into those higher time frames, if you look through the range that you have highlighted in blue, there's probably a 30-minute or 15-minute hourly that you're taking your partials into right there, and that's the right way to manage a trade like this. When you're just treating it as a retracement, not expecting it to trade all the way back up into the buy side. Right? I think you manage it well. Just like the only thing Carson said is you can look to trail your stop a little bit more trading inside of this retracement kind of action right here. Whereas when you're trading inside of like this, you want to be slow. So you can lock in a little in terms of profit on your piece of positioning. But really well there. I think you managed it well, Axel.
Good stuff. Alrighty, Mr. Rotten John. Duration of the trade was 14 minutes. This was around 150 to 210 macro. The PM kill zone, 2 NQ contracts, 1.7 risk to reward. Using a breaker block and an order block and a fair value gap. Draw on liquidity was buy side liquidity. Stop placement was below the low of the fair value gap. Partial taken first TP at buy side liquidity 1. Trade did not reach second TP. And body closed below the 5-minute fair value gap, consequent encroachment. I exited the trade there. Emotions before was common, waiting for the setup to form. Emotions during, after seeing the SMT divergence with the yes, I entered at the 5-minute bullish fair value gap, and when the first TP hit, I made my stop loss to break even. I was up nicely on the second contract, however, seeing the 5-minute fair value gap not hold, I abandoned my hold for the second TP and exited at market. Motions after, I'm glad I took partials and gave enough room for the second partial to run to the second TP, though it didn't reach it as its terminus. So from here, you can see you're buying in here, or looks like you are buying, I'm sure it looks like you're buying in this candle right in here, maybe up here, and then with the idea price is not going to return back down to this low, the one that basically creates, or the middle candle that creates the fair value gap. You're using this as a breaker block, and then you're taking your first partial in here, and then it looks like you closed down in here, which I think, after you see price close back below the consequent encroachment of this fair value gap, you're noting that price could potentially retrace back down into here, and so you're closing out in profit there, which is good because you can see, I'm not sure what price did after the fact, but overall it came back down into your entry, so you're at least preserving capital in that manner. I like that you're taking partials. I would say, I'm curious to know what price did. If price continued higher, I would say um, you still did the right thing because you're going later into the session, into the PM session. You're noting the S&T. I would also say it's good because you're noting that price is also trading within a inefficiency in here. Price dumped after that. Yeah, okay. All right. So yeah, you managed it well, understanding that when price closed below this consequent encroachment, it could come and fill this, it could come and fill this, and you're not wanting to sit through that. So I mean, nothing wrong with it here. I think biggest thing to note is just the trade management. Being able to sit there and save yourself, right? Pull yourself out of the water before it gets rough. You want to cover anything, Henry?
No, it's the same idea.
No, it's the same idea as with
Maxwell's, and
like we've been talking about all throughout the week.
We've been in a week where we're seeing a lot of bearish price action continuing, expanding lower, especially later end of the week, Thursday and Friday. So this is exactly how you need to treat it. You need to take those partials more quickly. You need to be aware of the fact that any move back to the buy side when you're expecting price to draw lower is just a retracement, and so you take your partials more quickly. And as you start to see this failing, then you're trailing your stop. So I think you manage
it well around that.
I would also say too, I'm proud of you because I remember last week one of the main things we were talking about with you is holding to your bias and understanding that whatever the higher time frame bias is, trying to not necessarily counter trend, trade it, and trade with the bias. And although price didn't necessarily have a bullish week, we have continuously been higher time frame bullish and still had that precedent going into last week, even though it necessarily didn't pull to the expectation. You had no reason not to, right? And so I'm noticing too that you stuck with the idea that your higher time frame is bullish, even though we didn't necessarily have a bullish week. That's the whole idea of it, right? It's until we get a couple weeks going against what our higher time frame bias is, then and only then can we potentially turn and revert to a different bias. So I like the idea that you actually stuck with the idea that you're only going to trade long, you're only going to go with what was the higher time frame bias, and that was bullish. So I do notice that, and I applaud you there. Good stuff. You can see the business right here. Good stuff. Alrighty. Miss Kate, narrative. Price was bearish, but we took out a daily low and showed signs of upward momentum. Couple that with the time being 3:30 p.m., we could fold back into a range to form the discount wick on the daily. Bias is bullish. Traded after the initial sell-off in London and the New York AM, we started to range back and forth a bit, but we finally took out its daily swing low, which was Tuesday's low, at and around 1525, aligned with the -4 standard deviation anchored from the London manipulation. We also dipped into the daily BISI that we've reclaimed a few times. Finally, this move down also created a new low for the day. I went in on the 1-minute chart and at this time looked for a 2022 model going back up so we could see the form of the discount wick on the daily candle in the last 30 minutes. So you can see in here.
I like it.
She's using this London manipulation, right? Understanding where that -4 is, understanding that we're trading back in that daily BISI, understanding that we took out the previous day's, or a previous day's low, not the previous day's low, but we took out a previous day low. And then looks like emotions before were neutral. During it was neutral in the beginning. I had my first partial set at 20 points and then the second one at the negative standard 2. I moved my stop loss to break even too quickly after the first partial and got stopped out for a tiny loss at $20 on the second contract. Price was simply returning to the breaker to pick up more orders. And then I proceeded to do a bad thing. I was kind of mad about getting stopped out on the second contract, so I re-entered when price started pushing above the newly formed order block. I justified it to myself as this was going to be my profit anyway if I hadn't messed up the trailing stop. And this is also another YouTube 2022 model, sort of. In reality, though, I had broken one of the rules of the exercise, which is to stop if you had made money on the first trade. I closed this trade near the -2 standard deviation. After, I'm annoyed with myself, to be honest. I completely forgot I wasn't supposed to enter another trade if the first one was green. I got caught up in thinking that that the stop out was somehow unfair because I wasn't right about where price was going. This is the kind of behavior I'm still struggling to root out. Here, and I could talk about that too, but we'll look into the charts really quick. So you can see first trade in here, right, utilizing this breaker, getting in on the breaker as price dips into there. Price comes up, she takes a partial, gets stopped out at break even here, right? When price is just reclaiming the breaker, and then from there, as price comes back up, she's utilizing this as an order block to then trade higher into this, right? So 19-minute trade, 2 minis. Risk to reward was 1 to 2, then break even, and then 1 to 3. Draw on liquidity was the opposing fair value gap in the -2 standard deviation, right in here. Break even was after the first partial. She took one partial in here. Stop loss was below the breaker mean threshold and below the order block mean threshold. So you can see first in here, she's utilizing the halfway point of this breaker in here as her first stop. She's using the mean threshold of this candle as her second stop. And then from there, she's here. You can see the business in here. There's the business. But I would say basically, that's where, as a trader, it's hard because you get rewarded for bad behavior sometimes, right? Just as you can get, you can get, you can hurt yourself doing good stuff. Like you can lose money but still do the right thing. You can also make money by doing the wrong thing. And I think as long as you're aware of, the idea behind that, because, the biggest thing is just the type of habits that you create in the system that you follow. And I'll talk about systems and stuff like that towards the end. I've got something to talk about. But the main thing is just the habits, right? Because what you just did is you told your subconscious that it's okay to do that, right? Because you were profitable on it. And although it's okay and, you're advanced enough and you're experienced enough to get away with certain things like that, unfortunately, and I would say too, it's one of those things where you want to, it's a very fine line, right? It's a very fine line. And I think that the main point of it would be not necessarily that you got back in here, but it would be, what would you have done if this also got stopped out, right? What if it retraced back into these inefficiencies in here, and you would have basically gotten then stopped out on a full trade right there? So I think that's the idea of it. I think it's not terrible that you got back in. It's just one of those things of you want to be cautious of the habits that you're creating, because price very well, if it wanted to, could have gone back in and filled this, right? Depending on how high resistance we were. And from there, you would have then gotten stopped out there, and then you have a decision to make, right? Because now you're fighting the idea of having to get back in if price returns back down into here, and then go all the way back up there, right? That's even a bigger fight. So I think it's okay, but I think it's one thing that you have to realize is what does your system say to do, and do you follow it? And the more you don't follow it to the T, and it rewards you, the more you're going to continue to not necessarily follow it in these certain instances. And then it takes one day, right? I tell people all the time, it takes one day. You can have weeks of great trading, and it takes one day to ruin it all. And so, you want to be as calloused as possible to never have that one really, 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 really bad day, right? We all have bad days. We all have losing days. That's all certain. But one thing that we don't necessarily want to happen is we don't want to subconsciously tell ourselves that these things, and it's not that you're subconsciously telling yourself, but it's the fact that your subconscious is now known to the fact that you can get away with it, right? And yes, you can get away with it sometimes, but sometimes you can't, right? And there's always going to be that idea, well, then if you did it this time and it worked, well, then the next time's going to be a lot easier to do too. So it's just something that you want to keep in the back of your head. Henry, you want to add to this?
No, I think you
covered it really well in terms of the psychological side of it.
You did have a really good read on price action here. I will say even though you do want to follow along with your rule set and not take an entry in if you're planning to do so. You did do it in the right way where where
you
didn't go back in with two
go back in with
like
two
the first entry.
the
You
first
just
entry. You
cut
just
your size in half.
your size
on
in
the first
half.
trade. It looks like you only took
It looks
one.
like you only took
Your
one.
risk was about
Your risk was about
the same or half
the same or half as
half as it was on
the initial
so
trade.
that's a positive.
So that's a positive in the way you
And you
managed
saw
it.
first
And you saw first that you were still aligned with order
so you're
flow.
not just
So
jumping
you're
in for
just
the
jumping
fact that
in
you
for
got
the fact
stopped
that you
out,
got
but you
stopped
actually had a
out, but you
reason to
actually
do
had a
so.
reason to do so.
So
So
there's pros to it.
there's
and
pros
cons
to it and there's cons to
You don't
it.
want
You don't want
to
to
damage your psyche
in the
you're
sense
not supposed
that
to do
you're
this
not
if
supposed to do
planning to do it.
planning to do
But
it.
you did have a good
You
read on
did
the
have a good read
assumptions,
on
so I do want to applaud you on
I
that.
applaud you on that.
And now you have something that you
Now you
can
have something
reflect on and be conscious of going forward. So,
forward.
like Carson
You know,
said,
like
if that
Carson
second
said, if
trade
that trade
that you go into
that you go into there,
stopped out, you don't want to put yourself
you don't want to put
Henry, I think
yourself
you
in a
might,
position.
man, I shouldn't have
Man,
done
I
that.
shouldn't have done that.
Stopped out, and now I need to feel
Now I need
like
to
I
feel
need to recover
like
that loss because that can put you
because
into
that can put you
a spiral in
a spiral in it.
just being
Henry, your
aware of
mic's
it,
Being
going in and
aware
out
of
a little bit.
your self-awareness
your
shows
self-awareness
in
shows
what you wrote here in your
what you wrote
post.
here in your post.
This is something you
This is something you
work toward and not do
work toward and
so
not
much in
do
the future.
future.
Well done here, Keith.
Henry,
Well done, Henry.
you might want to check your mic, Henry. It's coming in and out a little bit.
I'm having
some audio
issues with Discord.
We can chat about it after the call.
Okay. Alrighty. So that's that for the last week's training exercise. I'll go over this week's training exercise. I thought this one was kind of cool. So this exercise has to do with weekly profile. This week you must wait to see what you believe the high and low of the week is to form. So you're waiting to see what you believe the high and the low of the week is. So once you see that form, once you believe that the high or low of the week has been priced in, the following day you must look for a trade in the direction of that specific weekly order flow. So for example, if you believe the high of the week is in, the next day you look for shorts. If you believe the low of the week is in, the next day you look for longs. Whatever day you choose to trade will be the only day allowed to trade. So your account balance should be rolled over from the previous exercise, and then within that, obviously risk half percent if you're in profit or just getting started on an account. And then once you win your first trade, stop. If you lose or go break even on your first trade, risk 0.25%. And then risk 0.25% if you're currently in drawdown. If you win your first trade, stop. If you go break even or lose your first trade, risk 0.25%. So that's the trading exercise for this week. I'm curious to see how you guys do with it. We also have our 2022 mentorship model study tomorrow afternoon, or tomorrow night, I should say. But yeah, this is any questions, comments, or concerns on this one? I know we were talking about patience earlier, and this is something that's patient, right? You're going to need to see what potentially is that higher lower of the week, right? So you're definitely not going to trade on Mondays, and then you're probably not going to trade on Tuesday either because you're waiting to see how price utilizes the Monday high and low. And then from there, you might utilize Wednesday, Thursday, or Friday. Totally up to you. But the idea is try to see what you might think the higher or the low of the week to form is. From there, trade in that direction following it. Any questions, comments, or concerns on this one? All good here? Pretty self-explanatory? Cool. Cool. Alrighty, well we definitely ran through this one. I would say that's really about it for me. We've got our 2022 mentorship model study starting tomorrow afternoon. I believe it's at, correct me if I'm wrong, Henry, is it at 8?
8 p.m. Yep.
Okay, yep. So it's at 8 p.m. One thing that I would say, or I'll wait. You can answer that question.
From John. Since the daily on NQ closed below consequent encroachment of the daily BISI, is that considered bearish? I think you're referring to that reclaimed BISI from February 22nd. I would initially view that as there's an opportunity for price to draw a little bit lower. But just like we talked about, you want to see how the beginning of the week plays out. Because if you start seeing heavy displacement back toward the upside, then we can just draw back up into premium race. Okay. So just follow that displacement that you're seeing on the daily 4-hour, 1-hour time frames. Otherwise, we're operating from a fairly neutral perspective right now.
All right. So I'll leave you guys with this going into this week. I heard a quote this week, and it basically said, "You do not rise to the set of your goals; you fall to the set of your systems." And that stood out to me because if everyone on this call right now, including myself and Henry, if we all started a 100-meter race, right? We all line up on the starting line for a 100-meter race. What's our goal? To finish the race, right? Our goal is to finish the race. And that should show you that the goal means nothing. Just because you have these big goals, just because you have all of these things, the goal means absolutely nothing. It's the system, right? It's the system. And one thing that, just kept appearing into my mind to talk about this week was the idea of just how the reason why 90% of traders fail comes down to two things. Two things, only two things. And it's funny, it's either the trader does not have a system, or the trader does not stick to the system. And when we talk about systems in trading and how important they are, it's funny because people are so quick to they jump, right? They're jumping to conclusions. They're jumping, oh, okay, this trade didn't work for whatever the reason is. And I think you have to get in the mindset of just because a system doesn't work right away, right? You want to figure out why it could work and have data to back it. But at the end of the day, just because your system isn't necessarily working for a set of trades doesn't mean that it doesn't work. And it might not be the system, it might be the trader. But I would say there's a couple things that you have to realize within trading with regards to your system. First off, deeply accepting losses is the holy grail of trading. You need to be peaceful and calm, but strike quickly when needed, right? I say this time and time again. It's the slow but sharp knife that kills, right? And there's such a fine line, and that takes practice to understand how to be so calm and peaceful and kind of slow, but at the end of the day, not hesitate and be quick when needed. The only guarantee in trading is that you will lose. The most important skill in trading is learning how to accept losses. And it's not about having the perfect system, but the perfect mind, right? And you cannot repeat the same non-working process. So if you go and backtest something, that's why we backtest things. If it's not working in the back testing stage, it's not going to work in the forward testing stage. If it doesn't work in the forward testing stage, it's definitely not going to work in the stress testing stage, right? So understanding that back testing is crucial, because just because you back test something doesn't mean that it's going to work, right? That's what you figure out. That's where you go build data. That's where you go build potential starting evidence for. Your rules are only as strong as the emotions that created those rules. Your subconscious rules your behavior all the time, right? It's talking about Kate's trade this week, right? Your subconscious is going to rule your behavior. So doing stuff like that is going to outweigh the system, right? Your emotions and you're letting your subconscious take over will always outweigh your system. That's why you have to be so keen to know your subconscious and be aware about it. The subconscious determines how much money you will win or lose all the time, right? It's not your system. It's not your risk to reward. It's none of that. It's your subconscious. Just because you go and you have a 1 to 3 trade risk to reward, that does not determine how much money you win or lose, because your subconscious will determine what happens next, right? Even smart people lose because their emotions is subconscious, right? When a trade goes against you, you get nervous and uptight. You cannot think straight. The market works by taking money from emotional traders and giving it to calm traders. Right? The best traders don't take losses personally, and they also lose often. The best traders also separate their ego and identity from their trading performance. They also don't care about losing. They also don't have a need for instant gratification. They also don't have a need for external gratification about their identity. You also have to realize that even though it doesn't have to be seen as gambling, trading is gambling. in the grand scheme of things, the reason it's gambling is because the gamble isn't the trading system or the markets. The gambling is the trader. Right? We have three people. We have an analyst, a trader, and a gambler. We have that gambler in us. So if it is in us, no matter what, there's a form and piece of trading that is always gambling. Right? You're also embarrassed when you lose. Why? Losing makes you feel less of a man or a woman. Probably have felt that before too. Trading will also give you instant feedback about being a failure. Your mind destroys your trading results. You feel like you're not good enough. If you feel like a loser, the next trade will definitely generate a loss. You can't beat yourself up about losing. You must accept it. Your trading challenges reflect your exact flaws in your personality. And honestly, to be a really good trader, you need massive, massive, massive guts. Right? All of those things, and there's so much more that you can sit there and you can add to trading. But the idea is, if there's a problem in your trading, if you can solve it, then what is the need of worrying? And if you cannot solve it, then what's the use of worrying? Right? As traders, we find ourselves in this idea of stress, right? And it could be any form of stress. It's trying to get that funded account. It's trying to get that payout. It's trying to get this and this and this and this and this. And you're constantly trying to do something. What I think that the main thing is you're playing this super long life game that does nothing but feed you instant gratification. Right? And that's the hard part about it, is you don't understand that you're constantly given instant gratification. When you win, you're constantly given this instant discontent. When you lose, right? That's one thing that we're constantly fighting, is either instant gratification or instant discontent. When in reality, none of it matters because you're playing such a long game. So why is the system so important? The system is the second most important thing, the mind that controls the system, right? I tell people all the time, having not just a trade plan, but having order, right? You need to have order within your life. Everything has order, right? The sun comes up and goes down at the same time every single day. There's order to every single thing in life. And when you understand order, not just a plan, but order, and you understand more importantly where you fit within that order, you can start to move forward within your process, and you can allow, right? The main thing is I have order within my trading. And I know that I am the smallest piece in it. There are so many things that have to happen in the markets before I even get into the trade. There's a long list of things that I'm looking for. There's days and hours that go between me and the market before I go and be a participant in it. But the thing is I'm the smallest role in my entire order of trading. But I'm also the most important piece. Right? Myself and Henry just got new computers, and I'll use this as an example. I've got this nice, crazy, cool computer that does so many things. Right? It can process so many things. It can do so many things so quick, and it's awesome. But if it doesn't have this one little tiny piece on the motherboard of it, none of it works. The entire thing, all the components inside of it, none of it works without this tiny, 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 tiny little piece. And quite frankly, I believe that the tiniest piece on the computer is the most important. So you start to realize that you're such a small fraction to your entire trading plan, but it's the most crucial part. And that's the mind. That's the trader. That's the person that's clicking the button. That's the person that's making the decisions, post-trade, pre-trade, all that stuff. And you're susceptible to all these little subconscious wins and losses. Right? Kate was a good example this week of how there's such a fine line between getting away with certain things And then how many things can you get away with before you open your subconscious to the idea that it just is always going to work, and then once it doesn't, then you spiral because your subconscious is used to it working. Your mind is the most crucial thing that you have, and I think, and honestly, everyone that's listening to this call right now, like, if you want to be a good trader, you have to be as peaceful and as calm as possible. You have to be so sharp, and you have to be so, what's the word? You have to be so okay and content with every single thing. Every single trade, every single mistrade. You have to have this form of, and I'm not telling people to go and you know, people believe what they want and their religion is their religion, but you have to have this Buddhism to you, in a sense, where you have to realize that everything that happens, you have to be okay with it. And a lot of the reasons why you fail in trading is because odds are there's some piece or something that happened that you weren't okay with. And that caused a specific outcome that you weren't okay with, caused another decision that ended in another decision that ended in another decision. And it all rooted from discontentment from one specific thing. You're going to lose. You know that. Everyone here knows that. We've said it enough. You're going to lose. But are you okay with that? And you might say yes until you might say yes until it happens. And that's the main thing. Kate was a clear example. She was not okay with lose. She didn't even really lose. She went break even. She wasn't okay with it. She was not content with it. And it hurts because her ego jumped in the way. Because she knows how good of a trader she is. She knows where price is going. She knows she mismanaged it a little too tight. All that discontentment does one thing. It creates one simple action that immediately allows the subconscious to know, hey, I got away with it. Right? It's not the systems. It's not the system that is going, it's not the best trading system. There are successful traders all over the world that have so many different systems. But if you look at their personality, they're all different. If you look at their systems, they're all different. But if you can underline one thing throughout all of them, it's that they are calm. They do not worry. They do not stress. They are okay with enough on both spectrums of the charts, losing, winning, or missing out. And all of it is character flaws. We all have character flaws. I would sit there and I would encourage every single person on this call, sometime today before the week starts, to sit down, write on a piece of paper all their character flaws. Be honest with yourself. You don't have to show anyone, but write all of your character flaws. Because then, once you have them, just writing them down is not going to fix them either, but you can start to fix them, right? The idea of there's a way to solve them, and you don't have to stress about it, because if you can solve it, then why worry? And guess what? If there's some things that you can't solve, then why worry? There's things that you can't solve. What's something in trading that you can't solve? Let me know. Right now. Someone type it in the chat. What's one thing that you know for a fact that you cannot solve in the markets? Oh, wait. Ron John, I see your thing too. If you're looking at the markets as a whole and trading as a whole, what is one thing that you cannot solve? What's going to happen next? Why worry? You have no control over where the market wants to go, so why worry? Why worry so much about what's going to happen next? Oh, CPI is being released, NFP is being released, FOMC is being released, any news events being released. And you're sitting there and You're up on your charts like this. Worried. Freaking out. Even though you know you're not going to trade, you're so into it. Now, what's one thing we can solve? What's one thing we can solve as traders? Give me something that we can solve. We can't solve what's going to happen next or where the market's going to go. You can solve your emotions, your calmness and your demeanor. Exactly. So really what we're getting down to is what can we solve ourselves? What can we not solve? The markets. Boom. There you go. That's your answer right there. What do I need to focus on? The problem that I can solve, which is me. What can I not solve? The markets. So what do I not necessarily need to focus so much on? The markets. Boom. You know exactly where you need to go. You know exactly where you need to look. And you don't need to worry about either of the two. You don't need to worry about trying to solve yourself because you can. You don't need to worry about solving the markets because you can't. Right? Ron John said, my biggest issue is after losing the first trade, I hesitate in clicking the button on the second trade. The loss of the past trade affects the next trade in the system only to see it go to target. Unable to overcome this issue. The reason you're unable to the reason you are unable to overcome it is because you're not content. And that's not a external problem, that's an internal problem. That has nothing to do with the market and where it goes after it stops you out. That's an internal problem. Because it might not be a trade management thing. You might have followed your trade management and it still stopped you out and still went to your target. That's not a market issue. That's you fighting against your system. You did your system. You traded in your order. You did everything you were supposed to do. Nothing has to change there. The only thing that has to change is you being content with whatever that outcome was and not having to necessarily go back in. Because just like we talked about and Henry mentioned on the last call, do you care about what the market was doing a year ago? Are you worried about the moves you missed on February 12th, 2022, 2017? Are you still tight up about that? No. 18 years the market's traded without me even looking at a single market. You know how many moves I missed? And it's this idea of when you get right into it and you get in these charts and you start trading, and it's funny, and I'll call him out right now because I know he won't care, but one of the members in the community, John, I had a call with him on Thursday night and we were talking about stuff like this, and he had 2 great trades on Thursday. And I said, okay, well, what are you planning on doing tomorrow? Not trading. I'm not trading. I'm not trading. And he'll go back and watch this because he watches the recordings. But guess what he did on Friday? Guess what he posted in the chat? A trade. And it was a winning trade. Everybody does the same stuff. There's a reason why 90 to 95% of people lose. And it has nothing to do with the charts. It's because you don't understand when you get skewed one way or the other, you're going to do things that are not according to your plan. Right? John, I know you're going to be watching this and you're going to know exactly that. And you even said it and you texted me too. You're like, you're not going to be happy with me. I don't care. Because I'm not going to be the one that has the last say on it. The market will. Because that same behavior is going to get you caught on the other side of it. It will 100% every single time. If you do it once, you're probably going to do it twice. If you do it twice, you're probably going to do it 3 times. And you're going to keep adding to that. And then one time, it's going to really get you. And I tell people all the time, what is a trade really a win if you give it back? You win on Tuesday. Boom. You win on Tuesday. Let's say you win on Wednesday. Let's say you don't trade Monday, you don't trade Tuesday, you win on Wednesday. Boom. You got a winning trade. What do you do? What are you going to want to do? Right? We all sit here and on our winning days, I guarantee you guys think, none of y'all, the first thought is never, all right, I'm done, I'm closing shop, I'm not going to watch the markets. You're immediately thinking, what's the market going to do next? How am I going to be able to capitalize tomorrow? And was it really a win if you go back in on Wednesday and you give it back? Or Thursday and you give it back? The second I got away from being a break-even trader was, honestly, when I would just win. Odds are, if I was patient enough to get to the middle of the week and I found one good trade and I won it and I stopped. I didn't trade the rest of the week. That was the only fix I needed to do. I was break-even, all that stuff, and it wasn't anything in the markets that I needed to do. It was an internal problem that I could solve. And I found myself always, I was patient enough to wait to the middle of the week. I could find that one good setup. I would get it. And then either the following day or the next day, I just couldn't stay out of the markets until Friday close. And I would give it back. That's your problem, is that you just don't stop. You want to watch the markets every morning. You want to join the live streams. You want to do all this stuff. And really, in reality, the trading is not doing things 90% of the time. Like that is the holy grail of it. If you're a break-even trader, the best thing I can do, I can already tell you why you're a break-even trader. It's because you trade too much. And you don't know how to stop when you're up. That's literally it. It's a simple solution. You don't need to worry about it. You don't need to worry about the solution of it because it's right there. It has nothing to do with the markets. It has everything to do with the trader. Read somewhere that 4 to 5% who take payouts every month based on prop firm statistics are 4 to 6 trades a month. Less is more. Yes. Reading it does nothing, though. Just because you read it doesn't mean that you're going to be part of that statistic either. It's action. And the action is inaction. You have to realize that that is not reading a trading book about how to trade is not going to get you anywhere. Reading all these statistics isn't going to do anything. You have to actually act on it. If you go into the market this week and you win your first trade, I encourage you to sit there and post in the community, I just won my first trade of the week, I'm out, I'll see you guys on Sunday. Boom. And then, on Sunday, come back and say, I didn't look at a single market. And see if you actually continue to not press the button for the rest of the week. You see, the reason why you guys are always wanting to trade too is because you're wanting to pass this eval and get this payout and this payout. But in reality, it's slow. It's supposed to be slow. You want to pass it in one day. You want to pass it in 1 week. And that's how they get you. They know that. And so they understand that, okay, well, we're gonna allow them to potentially do this, but we're gonna have this tight trailing drawdown right next to them. So we're going to give them the ability to make upwards of, if not the whole account and the whole challenge, or at least 50% of it. We're going to give them that, but we're going to also have this really tight drawdown with no room for error. Yeah. And odds are, if you pass it in one day, some will keep it, but maybe not. Probably not. Like you have to have the idea that you're not going. It's slow. The whole game is slow. But yeah, I mean, in summary, from what I just said, trading it's simple. Trading is so simple. It is the most. It honestly is one of the most simple things in the world. But the emotions are difficult. Traders also find it difficult to commit to a method, even ones that have good probability of winning. You can have the greatest back-tested model that is forward-tested beautifully and stress-tested immaculately, but you just don't know how to commit to it to the full extent. And we talked about how there is a solution that does empower us to overcome the fear of trading, right? A lot of it is just fear, missing out, losing, all this stuff. But the good thing is there's a solution, so why worry? You know there's a solution out there. But yeah. I think that's it for me. Obstacles do not block the path. They are the path. Anybody have any questions, comments, or concerns? I think that's it. We're kind of short today. In and out. Enjoy the rest of your Sunday. It's sunny. Probably 75, 80 degrees out in Florida. We get started with our 2022 mentorship model study group, focus group tomorrow actually. Make sure that you watch the prerequisite episode or episodes. I can't remember if it's 1 or 2. Henry, is it episode 1 or episode 1 and 2?
1 and 2. 2 is the main focus, but
okay.
Watch 1 and 2. Yep.
Yeah. Watch 1, watch 2. Bring your notes. And it's open group. It's not just myself and Henry talking about stuff. Everyone there will have a little piece. I guess what we'll do is, depending on how many people are there, we'll split that up within an hour, and everyone will have 10, 15, 20 minutes to talk their part on it, ask any questions, and we'll see how it works.
Yeah, it should be good. I'm excited.
Other than that, I got 5 more days. 5 more days till 75 hard is over. We're close. We are close indeed. 75 easy. How would you overcome the urge to learn more about the concepts every day? I have the undeniable urge to continuously learn something new every day. That's a really good question, but I would say, that I think stems from the fear of you not knowing enough. And I actually think that you can utilize the idea of, instead of trying to learn new concepts every single day, right? You have that urge to learn something new every day because you feel like something's missing. When, in reality, I think you should flip that, and instead of trying to go into the markets every single day and learn something, I think you should focus your attention not on the markets, but on yourself. Because I guarantee you, the idea, and there is always something you can improve on, but it's not always in the markets. Right? Because if you're trying to learn something new in the markets, you're going to try to always change something, and your system's never going to stay static. You need your system to stay the system that it is. The only thing that you tweak within it is the way you react to it. And so I would say, instead of trying to overcome the urge to learn new concepts every day, try to learn something new about yourself. And how you react to it. And that actually isn't necessarily watching the markets every day. I would say it would be the vice versa. I would say don't watch the markets every day. That's a realization that you're going to have to come to. Don't watch the markets. Don't hop on calls. Have days where don't have your system and see and learn from yourself. I think, and just to you specifically, Aiden, I think you know enough about the markets, but I think with you constantly trying to learn more and more, you become it becomes a head case, when in reality, all you need to do is just shift the idea of, I don't need to change anything in the markets. I have plans set in place. I have systems that have evidence, but the only thing that's missing is a better understanding of myself in that system. And it's taking days where you don't watch the markets and see how you feel. And it's days where you take the markets and not trade at all and see how you feel. See if you can go a whole session and not touch the mouse. And also, when you're trading and you're actually placing trades on those days, whatever day you choose to trade, when you're trading, don't focus on what could change. If you lose a trade, don't focus on what could have changed in the charts. Focus on what could have changed in the trader. And maybe it's nothing. Maybe you don't have to change anything. Maybe there was nothing wrong in the charts, and maybe there was nothing wrong within you. And it's a loss. That's the weird thing about trading, is that when you lose, you immediately think something needs to change. Well, maybe I did something wrong in the markets, or maybe I did something wrong personally, and maybe it's neither. And maybe it's just a loss, because you're trading in the hardest thing in the world, which is the financial markets, that don't care about you and have such a level of uncertainty to them. And maybe there was nothing that needed to be wrong. You were at the right place at the right time. It just wasn't your trade. But you managed risk. And as long as you're okay with it, you're okay with it, and you can move on. Right? I think that's the biggest thing, is understanding that a lot of the times we look for these answers that there's no answer. You don't need an answer to everything. Maybe it's just a losing trade. Maybe nothing needed to change at all. And if you did that same exact thing again, mentally and technically in the charts, you would win. If you waited for that same setup at that same time, you would win. Maybe that's just that one loss that fits in the data set. No one has a data set that has no losses tied to it. There's going to be losses, and maybe that's the loss that ties into the data set. And it's not that you need to change anything. It's that you just need to be content. A lot of you guys look for answers when there's really no answer at all besides just being content. Now, if you're new, that's different. But there's certain individuals in here that I can just tell from the way you've traded and the things that you've thrown to myself and Henry, that you understand stuff enough to where it's not a market game anymore. It's a you game. I guess that's the hardest thing for me. I will always attribute things with something that I could have done something better. And that's why trading will, if you continue with that mindset, trading will always eat at you. There's discontentment. It goes back to the idea of having some form of Buddhism. You have to let things be. Be okay with them. You have to have this unprofound peace and calmness. Yeah, you have a desire to participate. Why? You shouldn't. This thing is scary. You need to respect the markets. Just because you see Henry in here, or was in here every single day, and that's another thing too. I'll use Henry as an example. For the past, I don't know how many weeks, 3 or 4 weeks, Henry was on the markets every single day, tape reading the sessions. You know how hard that is to do? Yes, it's providing value, but you know how much of a mental stress that is? Because every time you're going in there and you're constantly looking for something, that's toxic. That's why I don't sit here and I don't trust all these traders that stream every single day. You see someone's bio, I stream every single day 9 to 5. You know how susceptible they are to think that, susceptible to errors and losses, thinking that they can go in every single day and just call the markets? You can. You saw Henry do it. But you don't realize that there's a back end to Henry's emotions that aren't necessarily seen on the calls of trying to take a trade, trying to not take a trade, trying to be a good role model, trying to call price action for your guys' information and education, but at the same time not trying to capitalize monetarily on it. And maybe he just doesn't want to watch the markets. Maybe he had a winning day the day before, and now he's got to go in and watch the markets and then fight that. When in reality, he could have just taken the day off. Right? When you have a desire to participate, it's not a desire to participate, it's a desire to feed your ego. Because in reality, you don't necessarily want to participate in the market. You want to participate in feeding your ego. You want to feel that win. Because you want to pass a funded account, because you want someone to say, good job. Right? There's this ladder effect. In reality, I'll tell you what, the road to profitability, I can tell you right now, for everybody here, the road to profitability is you and only you in an empty auditorium for years, and the only thing you get is a slow clap. That's it, for years. You don't get anyone sitting there patting you on the back, saying good job, telling you you're the shit, telling you, yeah, we knew you were going to do it, we knew you were going to, no one, that's not why you should do it, and that's what you're not, that's why you feel that, really, if you dig deep enough, your desire to participate is the desire to feed your ego, because you want to have winning trades, which equate to funded accounts, which equate to payouts, which equate to everything else that comes with it externally. That's why you want to participate. And you have to disconnect with that. I have the desire to participate because I feel that I got to make it. Otherwise, I feel like I've got nothing. It's the idea that you have to make it. Well, in reality, that's still another form of, I get that too. It's the only choice, right? It's the whole idea of plan A. You got to go all in. But you have to understand what you're going all in on and what that responds to. You have no other choice. But what does it take to get there? And it doesn't take trying to fix everything every single day or participate every single day. What it takes to make it is not, right, you get filled with all this ambition and action and you got to do all these stuff. And everything else, in sports, that works. In almost 99% of other industries, that works. This is the one industry. The reason why it's so hard is because people get so ambitious about something that takes little action. You want to go back test. You want to watch markets. You want to forward test. You want to stress test. You want to do all these things. You want to run up these accounts. When in reality, market's going to always get the last say. The more you're out there, and you're going to make, I feel confident that everybody on this call will make it. But if you keep doing the same things over and over and over and over and over again, odds are you're going to get exactly where you are right now. Something has to change. And sometimes that change is realizing that nothing has to change. It's weird. It's this mind trick. For some of you, a lot has to change, technically and mentally. For some of you, it's only mental. For some of you, it's nothing. It's the realization that nothing has to change. And the idea that you have to change things is actually your downfall. Everyone's in different pieces of their journey. Okay, I'll stop rambling. Other than that, that's it for me. I'm all good.
Sit on my end. Any last questions from today? Appreciate y'all coming and joining us every Sunday. We're excited to get going with the 2022 study group too. Again, that's tomorrow, 8 p.m. Luis, all good. Parker, good. Okay.
Any last questions, comments, concerns?
Eyes in the mirror, C taken. Terry, good.
Yeah, not a problem.
Right out, yeah. Good stuff.
I'm proud of you guys too. I mean, you guys will figure it out. I'm certain of that. You just have to stick to it. You got to stick to that plan.
All right.
Other than that, I'm all good. You guys see up here, right here. See this? Up here in this corner right here? I got plans. I got goals. But not more importantly, aside from goals, I got systems. Because the goal is not going to get me to the goal. The system will. Right? We don't rise to our goals. We fall to our systems. Every time. Alrighty. Appreciate everyone. Enjoy your Sunday. Enjoy your trading week this week. Enjoy your regular week this week because we all have lives. I know everyone has lives outside of the markets. Be safe. Don't forget to go outside and touch some grass. Don't forget to laugh. Don't forget to hydrate. I think that's it.
All right, good stuff. Enjoy the rest of your day, and we'll see you all tomorrow morning, 8:45. Take care, everyone.